Goldman Sachs CEO David Solomon has faced a heightened amount of scrutiny recently, but this isn't anything new for the 154-year-old bank. Yahoo Finance's David Hollerith joins us with the details. Hey, David.
Hey, Rochelle. At the moment, Goldman Sachs and CEO Solomon are dealing with everything from partner unrest, a slowdown in investment banking, and a big pivot away from consumer banking. And we wanted to look back at history for another angle on this. And we found that Goldman Sachs has been through plenty of other times of turmoil. And that might mean that the current situation is not quite as dire as some might think. And Goldman actually nearly went bankrupt in the 20s with the stock market crash in 1929. In 1976, its top boss passed away on the job without a clear succession plan. And in 1994, it faced a record amount of trading losses during a period of really high historically high interest rates. And partner Steve Friedman, or senior partner Steve Friedman at the time, stepped down abruptly, and that sort of led to a power struggle within the firm. Henry Paulson, who later became CEO, ended up leading a coup against Friedman's successor, who was John Corzine. And Paulson obviously eventually became U.S. Treasury Secretary during the Great Financial Crisis. So the point here being, with looking at Goldman through its 150-year history, is just pointing out the big differences between the current situation and those other times. And a big one is just structurally. Goldman Sachs is obviously a publicly traded company. During these other times, it was a private partnership. And so the situation was the partners had a lot more control over the business, about its direction. And they also had a lot more to lose. It's interesting, though, if you look at stories back from those days, especially the 90s, it's very similar to, the stories we've been writing and seeing in other outlets over the past year about Goldman. And now because Goldman's now a publicly traded company, the biggest thing here is that the stock price is essentially what determines how well Goldman's doing, and its CEO Solomon, how well he's doing and viewed. As we know, the board sort of has the say as opposed to partners in this day and age.
Okay, so what should investors be keeping in mind about Goldman's current turmoil today?
Yeah, so Goldman's current situation is it's mainly a question of reputation, not so dire as some would think. Even the consumer banking business, which they're trying to pull out, is a pretty small part of their overall business. But that being said, the next 2 quarters are going to be really important to see how well Goldman navigates its pivot out of consumer banking. Analysts are going to be looking to see, obviously, investment banking, which they have a little bit less control over. They're going to be looking to see how that side of the business does, and then also how Goldman clears the decks, so to speak, of the parts of its consumer banking business that is trying to pull out of. We're seeing once every week, it seems like that Goldman is selling parts of their consumer business, and this isn't overall bad. But we are going to watch to see how the losses mount. Second quarter, they had record high losses, as highest since, record low profits, lowest since the beginning of 2020. So we're going to be watching the next 2 quarters to make sure that those losses don't continue to creep. RBC's bank analyst, Gerard Cassidy, is sort of called 2023 a lost year. So that's all going to be what determines Solomon's tenure at Goldman Sachs. But one thing I will point out is since he started in October 2018, Goldman has, its stock at least, has outperformed other Wall Street banks, with the exception of Morgan Stanley, which I think is lost a little bit in the noise of all this, is that Goldman is still in a relatively strong position.
David, thanks so much for bringing this to our attention and continuing to monitor the situation over at Goldman Sachs. Yahoo Finance's own David Hollerith. Appreciate it.